I'm doing well. How are you guys?
I'm doing great.
Good. You had a good first day yesterday. I enjoyed that.
Good. Did you have a cool morning up in Michigan this morning?
Yes, it's nice and crisp. I love these kinds of mornings.
Yeah, it was about 45 degrees here, so it was.
Yeah.
It's working back today.
Yeah, I see it. Well, hopefully it'll stay working. I'm going to take it off of my screen and I'm going to minimize my browser.
Okay, cool.
And just let me know if it goes out or something, let me know and I'll try to reconnect it.
Okay, I'll let Barry know though that he can watch it there today.
So Jennifer, you want to go ahead and test your screen share, make sure everything works?
Sure.
I've got, I was telling Matt, I've got all the polls entered. So just when you want, just tell me you want your first question, second question, whatever, and that's the question I'll bring up. I've got them in the order. I put them in the order you sent them to me.
Yeah, perfect. Can you see my screen okay?
Sure can.
Are you seeing just one slide or are you seeing speaker view?
I'm seeing just the one slide, change management.
Awesome.
JG Consulting.
Okay. That was the intent. Great. And can you hear me okay?
It sounds good to me, Jane. Emily, how does it sound to you, Matt? Everything sound okay?
I think she sounds really good to me. Your voice, your visual is very clear and your voice is very clear. You look
Yeah, it is.
Okay, thanks. Thanks, Jane and Emily. Great. Okay, so I stopped sharing.
Yep.
Okay, so we're good. Thank you for letting me test that.
No problem. All right, and I'm gonna share my opening slide, just a welcome slide for people to see when they first join. And then, so just before, you'll be after the break, Jennifer, and before you actually start, Secretary Redding, our Ag Secretary here in Pennsylvania, is gonna make, I think, 5 minutes or so comments, and then I'll introduce you and let you get started.
Okay,
So
great.
you'll still have 45 minutes for your presentation and 15 minutes for questions and answers. And I was telling Matt yesterday, some questions got chatted directly to the speakers and some were to everyone. So I'll leave it up to you how you want to answer the ones you get privately directly to you, if you want to answer those or hold those to the Q&A. But anything that comes to everyone, I'll just hold until the Q&A session.
That sounds good. Okay, great. And in regard to the poll questions, as you mentioned, I have them in order.
And you have a slide. Yeah.
Yeah, I put a placeholder slide in there so that you'll know that a polling question will come up.
Yep.
Okay, thanks.
So you had 4 questions, right?
Jennifer, you're still on mute. We can't hear your answer. I think I know what it is, but
Yes.
Zach, do you want just to say, do you want me to press the record or you're going to do that?
I'll do that.
Okay, so just let me know when you say you're going to turn on record, that's when then everybody, okay?
Okay.
And Zach, I'm gonna share the link to the website for where the notes are right away this time. So you can just, if you want to mention that, just tell them that it's
Yeah, I've got that in my script. So Matt and Jennifer, for your reference yesterday, I did a little demographic poll for everybody to answer where they're from and what their affiliation with the dairy industry is. And I'm going to do that first thing this morning as well. So, well, like Jennifer, I guess you were on yesterday and maybe you saw that, but so you know where most everybody's from and what the main parts of the audience are. So we'll
Good. That'll be good. Thanks, Zach.
I think we have somewhere around 98 people total registered, and we had up to, I think, 94 join yesterday. So hopefully we'll have that same level of participation today.
Very good.
Close my window because I don't live real far away from the train track, and the train comes by about every 30 minutes, it seems like. So
But only during webinars.
I'll just give it another 30 seconds or so before I start to record and have you let everyone in.
I opened up the room, so people are joining now.
Okay, I've started the record. All right, we'll go ahead and welcome everyone and get started. Again, welcome to day 2 of the 11th Annual Dairy Financial and Risk Management Conference. I'm Zach Myers, Risk Education Manager for the Center for Dairy Excellence. I appreciate everyone taking the time to join us today. If you weren't able to join us yesterday and joining us today for the first time, we had a great session yesterday, and of course that recording is available to you online with the link that you should have received yesterday afternoon. Today we have with us Matthew Gould and Dr. Jennifer Garrett. They're going to be talking to us about market dynamics first, and then Dr. Garrett's going to be talking to us about change management. Just as a reminder to the participants and to today's speakers, to give everybody an idea of where you're joining us from and what your affiliation with the dairy industry is, I would like to put up that same demographic poll that I put up yesterday and have you answer those 2 questions, and then I'll share those results. And as you answer those 2 questions, I'll just remind you that you do have access to the proceedings through the link you received via email yesterday, and it is also located in the chat box for your reference if you'd like to link to it from there. Like yesterday, I do have your video off and your line muted as you join. Please keep your line muted for the duration of the webinar to minimize background noise. Each presentation will last about 45 minutes, and then there'll be 15 minutes for a Q&A. If any time you would like to ask a question, you may type it in the chat box, or if you want to hold your question to the Q&A, you can and want to ask that verbally, just use the raise your hand feature under the participant tab, and I'll recognize you and you can unmute your line and ask your question. So whichever way you would like to do it. And with that, I'm going to end the polling and share the results. And just like yesterday, of course, everybody is over 50% are from the central Pennsylvania area, and 51% are in the Landing community, but there's a pretty good cross section of from the industry if you look at everything. So there's a few people from out of state. So with that, I'll stop these results and I will stop sharing my screen so Matt can share his. And so I will go ahead and introduce our first speaker. Matthew Gould is well-known and well-connected analyst and consultant in the dairy industry. He is the author of the Dairy Market Analysis and widely followed industry newsletter and serves as the chief market analyst at Rice Dairy LLC, a dairy futures brokerage. Matt has spoken on dairy-related topics around the country, from New York to Texas to California, and as far away as South Korea. Last year, he co-authored the CME white paper on hedging Class 1 milk and co-led a process to reform California's quota milk pricing system. His insights on industry subjects are regularly requested, including recent citations in Bloomberg, the New York Times, the Wall Street Journal, and the Washington Post. Matt also writes for Progressive Dairy. Matt earned his BS in economics from the University of Pennsylvania's Wharton School and grew up on a dairy farm in Western New York, and that is in its 3rd generation of ownership. And with that, Matt, I'll turn it over to you.
Thanks, Zach, and thanks for the introduction. Also, thanks for the invitation to be here, and thank you all for taking time out of your schedules to make time for today's terrific conference. So So Zach asked me to provide a market outlook. And if one thing, 2020 has made clear is that, there's always those known knowns, as Donald Rumsfeld is famous for saying. There's always those known knowns, but you really, the things that tend to wallop you over the head are those unknown unknowns. And 2020 certainly has been a roller coaster year. But before I begin, Zach, can you put out the first? I think it's the first poll. It's the one about how people thought 2020 was going to go. If you were when you were sitting back in December of the last year, because it's kind of funny because we didn't really understand as an industry or a country or whatever. Man, no one thought 2020 was going to be a bad year. It was incredible. So going back to January, late January of this year, the industry got together at Dairy Forum. Dairy Forum tends to be a conference that attracts a lot of the CEOs and leaders. Thanks, Zach. Can you close that poll? Or maybe I can hit that button. So that's incredible. The fact that only one person wasn't sure, 3/4 of folks were pretty sure that this was going to be a good year, and at worst, a quarter of people thought that this year was going to be a mediocre year. Thanks for that, Zach. I remember being back so at Dairy Forum, and we had gotten together. This was like a dinner meeting with a group of industry folks, and they asked everyone to take a bet on where certain product prices were going to go this year. And man, was everybody wrong. It was only really a month later or so that we started to see the initial impacts from coronavirus. And then, as the year has gone on, I've described it as waves, where we had the first wave where everyone went to the retail stores and stocked up, and then the second wave when everyone stayed home, and then kind of the third wave of reopening. And I suppose if you had the view that this year was going to be a very good year, or you had the view that this year was going to be a really bad year, in both cases, you were right. And so, it's kind of with that, that experience that we went through this year, a very humbling experience. I've organized today's presentation in recognizing that we can only talk about the known knowns. So, there's always plenty of room for surprises. So in the presentation today, the way that I've organized it is that first I'm going to zoom out, and I want to talk about 4 long-term patterns. Each of these are kind of in their own right. I guess you could call them, forecasting models. And what they are is they're 4 different long-term patterns that if you zoomed out from 40,000 feet, these have done a pretty solid job of forecasting prices. They would have forecasted that, the highs that occurred in 2014 and the lows that occurred in 2016. And I'm going to let the cat out of the bag early because I think it's important to have the conclusion as we are looking at these different indicators, these big high level patterns. And the cat out of the bag is that 2021, knowing what we know today, is setting up to be a mediocre year. This year, 2020 was setting up, as 3/4 of you had also believed, was setting up to be a pretty good year. Of course, who would have thought that, who would have forecasted a pandemic was going to arrive this year and so on. But 2021 is shaping up to be a mediocre year, and we're going to go through these high-level indicators that kind of frame up that discussion, where some things are particularly good or price supportive, and some things are particularly bad or price negative. And then after we hit those kind of 4 high-level patterns, then I'm going to zoom in and talk about the market fundamentals for individual products. So the way that milk pricing works in the U.S. is cheese and whey set that class 3 price, butter and non-fat dry milk set the class 4 price. Depending on where you are, your milk price is some combination of class 1, class 2, class 3, and class 4. We're going to focus on class 3 and class 4 today. So first, I'm going to start with these four patterns, and I think for some of you, this is going to be the first time you've seen 3 of these. The fourth one, the 3-year cycle, that's the favorite heuristic, particularly among farmers. That every 3 years you have a good year, every 3 years you have a bad year, and that 1 year in the in-between is a mediocre year. And historically, it's done a fantastic job of reliably, at least for the last 20 years or so. Excuse me. It's done a pretty fantastic job of nailing cycles, nailing the highs and the lows. It doesn't tell you how high it'll go or how low it'll go, but it's done a pretty decent job. And for all the complexities of dairy, it is the simplest description and most accurate that seems to reliably show what's happening. Now that's the one everyone kind of knows about. The other 3 are going to be more new. We're going to talk about the global milk supply cycle and kind of thresholds about what is excessive production and what is underproduction. We're going to talk about an inventory cycle which also is a pretty dramatic indicator of price movements. And lastly, that third one is the trade cycle. We're going to talk about where we are in global trade and trade agreements and new trade agreements, and how that has historically been linked to dairy boom or bust. So I'm excited to kind of talk about these 50,000-foot view items. After we go through these super high level items, then we'll get more to the traditional market outlook, which tends to focus on individual products as opposed to these high level indications. So I'm going to start first with the global milk supply cycle. Where are we in the global milk supply cycle? And then I'm going to go through each one of these because it's going to be confusing. It'd be much easier if 2021 was setting up so that it was all the same. Oh, prices are going up, prices are going up. No matter how we look at them, prices are going up. That's not the case. As I indicated earlier, the cat's out of the bag. 2021 is shaping up to be more of a mediocre type of year. So that means in terms of these high level indicators is you're going to see some conflict, where some indicators are going to be price supportive and some indicators are going to be price negative, and some are going to be in the middle. And then at the end of this high level, I'm going to show a scorecard of how we kind of did historically, and you'll see how that gets back to this idea of a mediocre year is shaping up. So where are we in the global milk supply cycle? This is a chart that adds up the milk production of the top 8 dairy exporters. It includes Argentina, Belarus, Australia, New Zealand, Europe, Canada, the USA, and Turkey. And you can see that where we're at in 2020 is we're growing milk in this latest, I think this is through June, the data. In June, milk production grew by about 1 billion pounds per month. If you look back historically, anytime we cross that threshold of, call it 2 billion pounds of milk per month growth, that's when we get into really excessive oversupply territory. We certainly experienced it coming up through 2014 in the overhang that hit us in 2015. Perhaps you also remember back in 2012 where we had these huge growth levels. So I want to set that as a guardrail. Anytime we get close to that 2 billion pounds levels, I think probably more realistically 1.5 billion pounds of growth per month, we are well oversupplied as a world. And, there is, though, you want some level of growth just to keep balance with growing demand. We know populations are growing worldwide. The middle class is rising. There is rising dairy demand. It's one of the tailwind stories of dairy. But when you get above 1.5 billion pounds, we've outpaced that growth. And we're oversupplied. You're going to end up building inventories. You're going to see articles in Bloomberg about stockpiles of cheese, et cetera. Now, on the flip side, if you get below, call it that billion pounds or so growth level, you end up with a situation where we're not, maybe call it 500 million. We're in a situation where we're undersupplied. Certainly, these big contractions you can see in 2014, for example, led up to those terrific milk prices that we had in 2014. Now, so where are we today? Well, we're kind of in this neutral-ish zone. We are not particularly surging like we did in 2014. We kind of did in 15, 2017, 18. We're not there. That's good news. It's not, we don't have this wall of milk coming at us. On the flip side, though, we don't really have this big contraction taking place that would be the setup of really good milk prices. And we can go back a year, to 2019, and that's what was happening. Is we had this slowdown in milk production growth. We had this drawdown in global milk powder inventories that really did set up 2020 to look like, hey, we're going to have a good year. It got complicated, but now here we are in 2020, and we're growing milk again. But it's not extreme. So if we're going to look at this first indicator, I do want to point out, the years like 2014 were preceded by big downturns in 2013. The big milk supply growth that we saw in 2014 tend to precede the real low prices in 2015. That's kind of the first cyclical indicator, and we're in a neutral territory in headed into 2021. So it's not extreme, it's not very bullish, it's not very bearish. It's kind of a mediocre setup, if you will. So that's the first indicator. So we're going to call it a wash, so to speak, in terms of price direction. Second indicator I want to talk about is the inventory cycle. And I guess I'll start on what I'm going to describe, because the chart after is a little complicated. What tends to happen is that when we grow milk supplies or demand slows, is all of the world's balancing capacity is in milk powder. So when we have too much milk, what we do is we put it into milk powder, we dry it, we put it into milk powder, and then we throw it in a warehouse somewhere. What that tends to do is it suppresses milk prices immediately as we're building inventories, but then it overhangs the market. And once we start to clear through those inventories, that's when prices tend to spike. So this chart on the right axis, that black line shows the CME cheese price. And then on the left axis, it shows the global milk powder inventories, and it includes inventory in the US, Canada, Europe, and Argentina. You can see the big increases in stocks tend to correspond with call it low volatile cheese prices. Certainly that last, we went through that huge increase in inventories in 2016 and 17, and we all remember milk prices and cheese prices then. But you can go back a ways. You can see the growth that happened in 2009 when the global demand collapsed with the financial crisis. Or you can go back earlier. In general, what happens is when we have this big inventory that exists, it tends to overhang markets and limit volatility. Prices tend to be lower, although you can still see the milk, the price movement, but you don't ever have the price spikes. The price spikes tend to happen only when we're drawing down inventories or when we don't have inventory overhanging the market at all. So where are we from this second high level 40,000 foot view? We're in the price inflationary zone. We don't have big inventories overhanging dairy markets right now. We don't look like we're setting up to have big inventories overhanging markets. And if this was the only thing that you had looked at, coming into 2020, you would have said, hey, there's at least risk on the table here for a really good year in 2020. That risk is still there today. We don't have big inventories. We don't have the overhang. So if we look at our second indicator, it's price inflationary. So the first one was a bit of a neutral zone. The second one is price supportive. All right. So now we're moving to the third of four, the trade cycle. Now the way that the last, call it 20 years, or call it maybe decade and a half is we went through a period where the U.S. booked trade agreements rapidly, opened up new markets. Dairy got new access to global customers. That growth in access, that growth in market access resulted in growing exports out of the U.S. And that also, that new opportunity, that new customer, that new demand, that resulted in a period of pretty price, price supported period. Well, I have bad news on this front. We have not booked any new WTO style trade agreements for a long time. And in absence of those, there's no new market access for us. In fact, it's quite the opposite, where you have countries like New Zealand or Europe getting trade agreements, and the US is losing out. We're losing share. They're getting the customers. We aren't having the opportunity. This lack of a trade tailwind is price negative. From a kind of a long-term trend point of view, the lack of new global demand growth, well, that tends to that's going to hurt us. There's no kind of two ways about it. Now we are getting a new style of trade agreement, like this trade agreement we have with China is a new style. It's not a WTO trade agreement. That's why it's not in here. We have trade negotiations ongoing with several countries that we've taken existing trade agreements and created new, ripped them up and negotiated kind of new ones with the same customers. We aren't seeing the new market access though. We're still and we're not seeing trade agreements that are lowering tariffs for dairy products and give us an advantage in the country. And that's why, that line looks flat. So if we look at the third trade in, sorry, I forgot about this slide. This is, these are the trade agreements, and then this is the growth in trade. And you can see how we went through a period here of terrific growth in trade. And you'll notice kind of that 1.5 billion pounds of growth. That was the high watermark of growth in trade. We're now growing trade lately, not very well at all. This is price negative. That's kind of the bottom line. Our third high level indicator is price negative. So we got a neutral one. We got a price inflationary one. We got a price negative one, or at the very least price neutral, but more price negative. And then the last one I want to talk about is the 3-year cycle. Now this is the one that every farmer knows. Surely, you can start, you can start counting. 2014 was a great year. 2017, well, that was the best out of the bunch. And then 2020, well, we did have record cheese prices. You can keep counting back all the way, 2000 sorry, 2000, I gotta actually do the math here a little bit. 2011, 2008, 2014, 2008, 2005. Sorry, I misspoke. It's an unbelievably reliable indicator. Right, it's simple. It's easy to keep in mind. Where does the 3-year cycle put us? Well, if we start counting from the bad years, we can go 2009, 2012, 2015, 2018, 2021. That puts us in a price negative kind of situation. If I'm, we look at the 3-year cycle, well, it seems like we're going to have some pretty difficult headwinds in front of us. You know, the same degree though is it worked pretty well for that class 3 price. 2014 was supposed to be the good year. Sorry, 2020 was supposed to be the good year. It seems to not be working so much for that class 4 price. So that 2020 wasn't as terrific as we thought it was for that market. So, you know, there you go. You kind of have this, we're going to call it price negative from a 50,000 foot view. I know nothing about dairy. This is the only indicator I'm looking at. And that kind of, that's our setup, is we have a bunch of kind of mixed indicators. So where does that put us? So this is a scorecard that I put together that, you know, red being price negative, yellow being price neutral, green being price supportive, for the setup of each of these years, and where did it put us? And I use cheese prices as kind of the my bellwether here. And you know, you can see that 2020 had went two out of, you know, 2 greens and 2 yellows and no reds, and that's the, you know, in this whole period, that's the most green we had on our scorecard, and that was the highest prices that we've, you know, of the trade group. And we can go and you can look at 2018 with, you know, 3 reds and 1 yellow. That's a 3 out of 4 in terms of bearishness, price negativeness, and that's the lowest in the group. We come to 2021, and we have 1 green, 1 red, and 2 yellows, right? One thing that's very price supportive, one thing that's very price negative, 2 kind of more in the in-between. It looks most comparable to 2017, where that was the last time we kind of had one of these high-level indicators being price supportive and one being negative and one being neutral. It puts us on a course of, well, things seem pretty neutral. 2017, we had $1.63 cheese prices. 2021, I'm forecasting $1.62. So, you know, that's I wish it was more exciting. You know, I wish that from the high level point of view that we would be talking about, you know, some extremely bullish scenario, but that's what we got. So, you know, that's kind of the high level point of view on markets. That's a 50,000 foot view. I'm going to take a sip of water here, and then we're going to dive into kind of the product by product outlook. If you know, if this is, you know, one thing I guess I want you to take away is that, you know, this 2021 year really is setting up to have kind of some good things and some bad things, which leaves us for, as a price standpoint, as an outlook of looking at something in between. Okay, so now I'm going to zoom in and talk about kind of the individual product categories. Now, the way that you know, just a refresher for those that aren't particularly familiar about how milk prices get determined, which of course, I mean, is no simple task in many cases. We use end product pricing, so it's not a question about what is milk worth, and then it's a question about what are these dairy product prices worth. And then what happens is these dairy product prices get put into an equation, a formula that subtracts out the cost of making it, and then includes the yield, and that's what a farmer gets paid. So if, for example, milk goes to a cheese plant, the cheese plant formula, the costing formula that tries to value milk to the farmer, uses the cheese price, subtracts out make allowance, and from from 1 pound of milk, you get about 10 pounds of cheese. That, I think the equation works out something like 9.8, but just for simple case, 10 pounds of cheese. So you get, okay, well, what's the price of cheese times 10? What did it cost to make 10 pounds of cheese? That's what a farmer gets paid. And so there's a formula like that that's kind of the class 3 formulas. It uses cheese and whey to come up with an end product value for milk. Class 4 is butter and non-fat dry milk. Class 2 is non-fat dry milk and butter. And then class 1 uses all 4 key commodities, which is cheddar cheese, dry whey, butter, and non-fat dry milk. So because of that, the drivers of your milk check are these 4 individual commodities. And so we're going to zoom in and look at each individual commodity market and what the big factors are. This is we're going to get much deeper in dairy discussion on this. And we're going to do a lot more, call it dairy nerding out, so to speak. And so we're gonna dive in now. I'm going to start off talking about the total milk equivalent globally. So if you take all the milk and you kind of standardize it, where are we at? And we went through, of course, a period of surplus in the first half of 2020. This was, of course, caused by coronavirus and all the demand destruction that happened with it. We also saw global trade contract in the first half of 2020, same reason. And so we had surplus. As we got into the second half of 2020, trade has rebounded pretty substantially. The data is catching up. At the same time that we have milk supplies starting to pick up, and so we've been relatively balanced. From a global perspective, I have us in modest surplus going into 2021 and kind of thereafter. We did go through a period in 2018 and much of 19 where global trade kept pace with milk supplies, and we actually ended up drawing down inventories in that period. So now I'm going to talk about non-fat dry milk. That non-fat dry milk, and we zoom in and we look at, well, what happened in 2019? Well, we saw that massive draw when we were at that 50,000 foot view, and we're looking at milk powder stocks globally. In 2019, we had a massive drawdown. That massive drawdown was because global exports, we saw these big increases, outpaced our global supply. So in each of these charts, I have this term available to be exported. What that is it's the total production minus what is consumed in all those 8 countries. So it's after you feed the domestic population, what's left that could be exported. And we went through this period in 2019 where just massive, big growth in trade, pretty big declines in product available to be exported because of decreases in production. And you can go back and look at that big surplus period in 2015, 16, 17, where we built those big inventories. And you can see how we've kind of retreated from them. You can also see now as we're looking forward that we aren't, I'm not forecasting any big disjointedness, at least not in the immediate term. As we get closer to the second half of 2021 and global milk supplies continue to ramp up, that's when we are talking about a situation again where we're going to build inventories. Before then, though, the first half of 21 is shaping up that we're going to be much closer to be imbalanced. So, that's kind of the simple outlook for non-fat dry milk. Similar to the kind of theme of this presentation of 2021 is set up for not too much of extremes. The outlook seems to reflects that as well for that commodity. Okay, so the other half of your class 4 price is butter. The way it works is for every penny change in non-fat dry milk, it adds about 8 cents to 8 or 9 cents to your milk checks. For butter, it works out to be about 4 cents. When we look at the global butter market in 2020, we had this big destruction of food service demand. We also had destruction of food service demand for cheese, and so people didn't make cheese; they made butter, and we had this kind of surplus. Now, as we forecast globally, what's happening with butter is that as we go into 2021, we're going to return to balance as global trade improves. But we kind of have this kind of short-term overhang. This is especially apparent in the U.S., where we had this big destruction of demand, and now we're in surplus, and we have the lowest butter prices I believe since 2013. Now, I want to talk about what's happened in butter because it's quite a confusing situation. I have people calling me and telling me, oh, they went to their local Costco and they can't find butter on the shelf. How can it be that we have the weakest or lowest butter prices in more than 5 years, and also not be able to keep up with demand? What's going on? And what's happened in butter is prior to coronavirus, approximately 55% of the butter that we consumed as a country was consumed while going out to eat. You can think about going to an Italian restaurant, for example, and they keep coming by and with bread, and you butter the bread, or you get a cream sauce on pasta, or that type of thing, being the source of that that food service butter consumption. I know in my case, I never eat as much butter as when I'm sitting there waiting for my actual meal to come out, and so I keep buttering the bread and eating it. Now, that's not, as a country, as I said, we consume 55% or so of our butter when we're going out to eat. And we all know that in this environment, the food service industry has been pretty devastated. The Open Table is a technology company that books reservations for sit-down restaurants. And they're still estimating total reservations at sit-down restaurants in the country are down by something like half. So the full-service restaurant industry has been decimated, and that's the reason why our butter prices are so low, is because, well, we did consume more butter going out to eat, particularly at sit-down restaurants, and we're not doing that anymore. On the flip side, retail butter sales have been extraordinary at times. In the midst of the coronavirus, there were some weeks early on when retail butter sales had more than doubled. We're not talking about 5% increases, which would be a good increase in butter in a normal year. We're talking about, in the peak of it, doubling. And the dairy industry is pretty efficient. We don't have equipment that is sitting half underutilized. If your equipment to convert bulk butter into print butter was underutilized like that, you'd either lower your prices to try to get more butter orders, or you would just you'd sell that equipment. And because of those growth rates early on, we have maxed out and exceeded the capacity in the country to print butter. Now, that term print butter, what happens is you take a 25 kilogram chunk, so call it a little more than 50 pounds, and then you put it into quarter-pound sticks. That's what those print lines do, and then they put it in a box and sell it to the retail store. That's where we kind of have a bottleneck as an industry because of the substantial growth that occurred early on in retail butter. Now, as the summer has gone on, particularly in the last 21 days or so, those retail butter sales are no longer looking as dramatic. They've slowed something to like in between. I think the lowest one print number I've seen so far is 0.5% growth to 5% growth in that vicinity. That's a pretty big change. During July, they were still averaging up around 25%. So we've had this downshift in domestic retail demand as I think people got fat during coronavirus isolation times, and they baked like crazy. And now we're kind of having some butter fatigue. One of the big speculations that in discussions is, well, is that going to change as soon as we get people back in their homes because it's cold outside? Will we see baking and things surge again and see them come back? I don't know. I do think we are going to have a good fourth quarter holiday demand season, but it's not going to really matter that much because we've already gone through this period where we have had demand destruction, and as a consequence of that, inventory building. So you can see my forecast. I'm not particularly bullish on the reopening of these sit-down restaurants. That puts us in a situation where we're in a net domestic demand destruction environment. And in that environment, we have more butter than we have domestic sales. And so we're in surplus. So that's kind of The butter outlook, it's not a particularly rosy one. You compare it to non-fat dry milk, where non-fat dry milk, we're looking relatively balanced, especially compared to those periods like 2015, 16, 17. Butter, we're looking pretty subdued. And historically, when you have this happen, is you don't have a ton of volatility in butter prices. Okay, so that's the class 4 side of the fence. It's kind of a mixed bag, and certainly it's not super price supportive. It's not the the most bullish outlook I think I could give, but it is what it is. So now we're going to talk about kind of the makeup of that class 3 price. For cheese, every 1 penny change in the cheddar cheese price is about a 10-cent addition to your milk check, your class 3 milk check. In the case of cheese, we went, as a globe, we're in a relatively balanced situation. If anything, maybe a little tight here in the second half as a globe. And I have us I'm forecasting that we're going to head into surplus in 2021, driven by additional capacity, new manufacturing plants being built, a couple of which in the US, and I'm going to talk about them in a second. I do want to draw your attention to this global cheese export trend, right? This is a long-term positive trend. We've had some periods of above trend growth rates, but what we had here in the first half of 2020, of course, was a decline. Now that decline in the first half has returned to growth. Cheese has been, as far as a commodity is concerned, it's been a winner in this coronavirus epidemic. And the reason why is because our big cheese purveyors, our pizza companies, have been some of the first to adopt the technology to low contact or no contact ordering and delivery. And their sales have surged 20% across the big names, as consumers have wanted to go out to eat, have not wanted to go in person. And this has been the optimum in convenience, is ordering pizzas or bread with cheese on it. So globally, global demand is actually for cheese is in a pretty decent place. Now I have us as a globe returning into surplus into 2021, and that's driven by new capacity in Europe and also the US. So now I want to talk about that new capacity. So and also what happened this year. So this is a chart of American type cheese. It's American type cheese is cheddar and Monterey Jack are plants that make cheddar cheese. Also tend to make these other American style cheeses that are higher moisture, pepper jack, that type of thing. We went through a period here, call it from 2015 to 2018 of surplus, where we were producing more cheese than we were consuming, and we were unable to boost our exports enough to keep up. And so, that's what subdued milk, and that's what subdued milk prices were going on 4 years. Now, coming into 2019, that changed. We started to have constraints in capacity. We had several cheese plants shut down in Wisconsin and California. And that led up to kind of 2020, where we had growing demand. We had no new manufacturing plants coming online. Surely 2020 was going to have set record cheese prices. At least it was going to give it a run for the money. That was kind of the view coming into this year. Who would have thought that we would have also set multi-decade lows in cheese prices? That of course was the coronavirus X factor. But as we look forward, what's on the menu? Well, you see this huge growth in surplus cheese, and the driver of that growth is plant expansion. So we have a new plant coming online in St. John's, Michigan. That's a joint venture plant between Glanbia, DFA, and Southeast Milk, which by the time it gets to capacity, the second quarter next year, will be the 6th largest cheese plant in the country. We've never opened a plant that big, that fast in the history of America. This is a new This is a new first in terms of scale. And the way that cheese plants work, the economics of a cheese plant, is that you have to run them full, or you lose your tail. And as evidence of that, Glanbia, they put out an annual report, and then their last, or semi-annual report, and in their last report, they had their margins on their American cheese business, and their margins were 0.5%. So off a $2 per pound cheddar cheese price, their plants, which are the largest in the country, some of the largest in the world, make a penny. That's how tight those margins are. That's why you have to fill these plants up full, and that's why they're building them with such scale and magnitude. As a consequence of that, it's kind of like a shock increase in supply. Now, demand doesn't grow in the same way. We don't just wake up tomorrow and have a surge in new cheese demand that's commensurate to our scale of brand new cheese plant. And I guess I feel like I'm a little bit picking a bit too hard on that St. John's plant, because we also have another plant. It's First District is having an expansion in Litchfield, Minnesota, which is going to come online in the first quarter of next year. So we have 2 cheese plants that are going to add to supply. And that's why when we look at cheddar cheese prices, we're talking about a big surplus forecasted in 2021. Now, this is something we've known for a while. And as a consequence of that, our exporters are out there aggressively trying to book forward sales, because the way that we have new plants coming online in the Midwest. If you're in the West, you know that you're going to have to find new customers because you're at a freight disadvantage. In any case, that's kind of the setup for American type cheese. It's not particularly priced, rosy from a farmer's point of view, but it is what it is. Now this period that we've gone through, where we've had record cheese prices, I want to point out that was preceded by 2019, when we had 3 different cheese plants closed down. We had a barrel plant in California, a barrel plant in Wisconsin, and then a cheddar, at least 1, maybe 2 cheddar cheese plants in Wisconsin. So that's why we haven't been able to grow supply and keep pace in coming out of 2019, 2020. As we go to 2021, though, we have a supply response. Okay, so then that gets to the last product to talk about, which is dry whey. Now, dry whey markets have been relatively subdued this year. We haven't seen a ton of volatility in them. And I want to talk about that and going forward in a second. But first, I want to talk about 2019, where we saw this big collapse in that term, dry whey available to be exported from the U.S. And what happened, that big decline, was due to a closure or loss of dry whey plants in the U.S. And we had a couple different ones closed down. They were old, they were aged. In the whey industry, the investment has been into making high protein whey products. At the same time, corresponding with that decline, was the absolute decimation of China's hog herd. China has about as many hogs in their country as we have people in the U.S. And their hog herd decreased at its peak somewhere around 30-40%. And it's those piglets that are a key global user of carbohydrates. What they found is that piglets grow faster when you feed them lactose, and so that's why they're kind of the big consumer. That when they had their hog herd decimated, well, that also decimated the demand for those products that are also high in lactose, like dry whey, which is somewhere around 77% lactose. As we get into, so that was kind of 2019. Now China's hog herd is rebounding in terms of size. It's approximately at the same size now as it was before the coronavirus, before the health issues and disease issues they had there with African swine fever, or African swine flu, excuse me. They had the decimation, the government spent a boatload of money, industry expanded. They're now back in terms of where they were in terms of number of pigs, but they're much more consolidated. Those pigs are on these big factory style farms that have nutritionists that go and import carbohydrates to maximize rate of gain. And so the global whey market is recovering in terms of size and scale. On the flip side, we've had a decimation of the high protein whey demand out of the US because of coronavirus. So people haven't been going to gyms, or gyms are closed. And as a result, they haven't been getting their tub of high protein whey protein concentrate or whey protein isolate. And as a consequence, those prices, WPC 80, whey protein concentrate 80 prices, are at the lowest price level probably since the financial crisis in some cases, at least at the low end of the market. And so you kind of have this kind of complicated heading in opposite directions, where the dry whey market is somewhat, would be normally supported, but because the high protein whey market is so beat up, that you have companies trying to make dry whey instead of these high protein products, or at least as we get into 2021, that being the case. So that kind of makes a bit of a yin and a yang that leaves the way that would normally leave the whey market kind of in balance. But now we also know we have additional supply coming online pretty aggressively beginning in November, and then I believe in the first quarter next year. And so you'll see in my forecast coming up that whey prices are estimated to be kind of solid or steady and then declining. Now, the last thing I want to talk about is one of those wild cards. And you'll notice that I haven't mentioned it at all so far, and that's the extent that government intervention has, found another gear, if you will. And I don't really have a good way of forecasting what the Trump administration is planning to do. At the end of August, the Trump administration announced that they found another $1 billion to put into the Farmers to Families food box program. And that additional $1 billion corresponded with the big rebound that we've seen in block cheese prices over the course of the last 3 weeks or so. I went back and looked and tried to find where in the rules did it say that the Trump administration, the USDA could use another $1 billion. And I kind of came to the conclusion that they used a broad interpretation of the rules to give them the authority to find that money. Regardless, this is the type of government intervention that we have not seen in dairy in a long, long time. The various programs that have come into place during the crisis, the foremost one being the Farmers to Family Food Box Program, it has been using up, call it somewhere around 2.5% to 3% of the US milk supply. In a non-coronavirus situation, we're normally trying to forecast whether US dairy is 1% undersupplied or 1% oversupplied, and that's whether it's a good year or a bad year. Of course, coronavirus has been very disruptive, and it's kind of moved the meter on that. But we're talking, that 3% number, that doesn't sound big. In the world of dairy, that's a huge number. So, we've had this government intervention, and to me, that remains a wild card. The latest round, that last $1 billion, is supposed to be for purchases through the end of October. We can see that we're currently scheduled to step down purchases pretty dramatically in November. And if that does happen, and you'll see that in my forecast, and I'm kind of forecasting that as the base case, that's a pretty price negative thing. All of a sudden, we have 3% more milk than we have demand, so to speak, or maybe not quite that extreme, 2%. If on the other hand, we continue to see government intervention, that's a wild card. And I've had lots of conversations about, well, what happens if Trump wins? What happens if Trump loses? How will that change things? And I really don't have a terrific model, so to speak, to try and figure out, what will happen. What I do think is that as we have gone through a crisis, we've had record unemployment, record speed of increases of unemployment, and people hungry. And when you have people hungry in your country, the prescription of that is to get them food, regardless of who is in office. Now, if we do get a vaccine that makes it past the phase 3 clinical trials and comes out, and we start to see the use of that vaccine, I don't know. I'm not an expert on that. Let's say December or January or February of next year. To me, that's the thing that I will be watching in terms of expecting government involvement to slow down and leave markets. But in any case, it's worth mentioning as an X factor, the government involvement in markets really hasn't been precedented for a long period of time. We obviously had a lot more government intervention when you think about the 70s and 80s. And in the 2014 Farm Bill, we got rid of the support program, which, I think many in the industry thought was, the end, so to speak, of government intervention. Obviously, this is a new form of it, and I really don't know how to forecast it particularly well. I do think it's worth acknowledging as a known unknown, where it remains an X factor in markets. So that gets to my bottom line, which this is my price forecast. You can see in particular about the low cheese prices that I'm forecasting next year as we get more of those cheese plants online, and how that's going to ding dry whey prices. You can see how I'm forecasting relatively stable butter prices as we build inventory, and as we get into next year, restaurants reopen, that kind of thing, and demand improves. And you can see my non-fat dry milk forecast, which I am forecasting middle of next year, the highest prices in a long period of time, with my high at $1.23, as we don't have a ton of inventory overhang in the market, and we do continue to see milk powder demand grow worldwide. When we talk about how those translates into actual prices, you can see that my price forecast for class 3 is particularly low. My class 4 price forecast is higher than what we experienced this year, and that sets us up on course to have a year of mediocre prices, mediocre to subdued type of prices. So with that, Zach, I think I have one more poll, Zach, and then I'm going to hand it over to you. And the reason why I wanted to kind of end with this question is kind of as a reflection of what we just went through, and how we went through that setup in 2020, where in December 2019, everyone and their brother thought this year was going to be a good year. And in some respects, that was right. That was the correct view. It's just the other correct view was that this year was also going to be a terrible year at times. This question, how do you manage milk price risk? I think it's an appropriate question and an outlook where there's a bit of humility in recognizing these are the things that we know today. For all the things that we don't know, although we can have a base case of what will happen, there's much that can change. So as a summary, just of what I just presented, when we look at from a 50,000 foot view, the high level, long-term, reliable patterns, this year is setting up to be 2021, excuse me, is setting up to be a bit of a mediocre year. When we look at when we zoom in and look at the individual product developments, cheese, we have new capacity coming online, expected to subdue those prices. In the case of butter and non-fat dry milk, we don't have, or at least non-fat dry milk, we don't have big inventories, and I'm forecasting some of the best prices for class 4 in several years. So with that, Zach, I think you have questions and things.
Yeah, I don't know if you've got any privately to yourself, but there it is, 4 questions that came in to everyone. I'll just ask them in the order I got them. And the first question, let me scroll up here to it. And when you're talking about trade agreements, someone asked, would TPP help with the trade cycle if it opened up again?
It's the way that TPP was is that there were some wins in dairy. There was also some loses for dairy. I think in net and total it would have been slightly positive. The biggest thing that would help with trade is that not if we're talking about one set of trade agreements, but if we're talking about a country that is on a mission to find ways to open up new markets. And there are some big ones that are on the table. For example, the United Kingdom, as part of Brexit, that's one of the largest imported cheese markets in the world. The Chinese dairy industry, we're at a huge trade disadvantage to New Zealand and Australia. You see Europe investing very heavily in certain African markets. And those are the places where we really want wins. The number one market that we could get as a trade agreement with would be in India, which won't happen anytime soon. They'd be the largest consumers of dairy in the world by country. So regardless of who the trade agreement is with, it's almost like it's not about having one, it's about having a philosophy as a country of trade is good for ag. So.
All right, thanks, Matt. The next question is, does the new calculation of class 3 and 4 and how it is used to calculate class 1 base price change anything in terms of your forecast? And I'm having that figure that has something to do with the negative PPDs lately because of the spread between class 3 and class 4 versus the way class 1 is now calculated.
Yeah, so up until, like, if you had compared the old formula to the new formula, since it was implemented, it was basically nearly a wash up until we got to June of this year. And then after June, the old class 1 formula would have calculated a higher price, in some cases on the order of $5, $6, $7 more. As a result of that, dairy farmers did not in the country, particularly high class 1 markets like the Northeast and Southeast, didn't get to experience the joys of those that high class 3 prices had given in the past. It doesn't change my forecast. I do think I think there's 2 camps. There's one camp that said, hey, we missed out on an opportunity here. In these prices have kind of made federal orders a lot more disorderly. And then the other camp says, well, we don't go through a coronavirus crisis every day, guys. So let's not make our decisions based off of a pandemic. I don't know where I sit in those 2 views, but those are kind of the 2 different arguments that I hear back and forth. The one benefit to the new pricing system, which I have experienced, is it has allowed companies that either buy or sell class 1 milk to be able to offer a fixed price. And that's why they made the change. Whether or not that the overage that they attach to it ends up being around 71 cents is the right number, I don't know. But in terms of changing supply and demand as a country, I don't think it has had, it doesn't have a huge enough impact to change my forecast. It did certainly lower average farm gate incomes this year, though. That's for sure.
All right, the next question I have is from Phil, and I didn't quite understand his initial question, so I chatted him to help me clarify it for me. So I'll ask it the way he sent it to me privately. So with climate impact likely in the coming decades and parts of the world needing dry milk powder, does Pennsylvania have the capacity to help meet this increased global demand for dry milk? And the second question is, should we as a state be investing in more dry milk production?
I think it's a great question because it gets at kind of the heart of what is the dairy industry in Pennsylvania kind of at a strategic advantage in terms of being able to, where can they win in the world marketplace? When I work with customers throughout the country, and I'm going to try and share some of those perspectives to maybe answer that question, or at least give some kind of additional color to help you answer that question, because it's an important question that the industry needs to wrestle with. The way that dairy works is that if you ship a milk product that has a lot of moisture in it, fluid milk being, of course, 87%, but other products like yogurt or cottage cheese, it's very expensive to ship these products that have high moisture contents very far distances. And that's why, as a country, we don't make fluid milk in Idaho and ship it to customers in Philadelphia. It's a reason why we have local milk supplies. It's those economics that drive that. The flip side of that is that if you make a dairy product with very low moisture content, you can make it far away from the population center, because the cost of shipping as a percentage of the value of the good is less. It's concentrated. That's the reason why we have big milk powder plants in states like Idaho or Kansas, and why we have big cheese plants, which are somewhere in the middle. They have more moisture than dry milk, which is maybe 3% moisture. While they're located in those kind of similar states, Idaho, Texas, that aren't particularly close to population centers on the East Coast or the West Coast. So the question seems to be, well, we know that Pennsylvania. Hold on, there's one other thing. The dairy farmers that I work with the lowest cost of production in the country, the big guys with the biggest scale and so on and so forth, they have a cost of production somewhere in the $14.50 per hundredweight range, which is several dollars below, I think, even the largest farms tend to be in the East. And so, the question of where can we win, it really only makes sense to make milk powder in Pennsylvania if those other parts of the country are unable to grow their milk supplies. And currently we have certain states like Idaho, which has quotas on, the processors put quotas on their producers because the producers want to grow their milk supply and there isn't enough processing capacity. Same thing in that like New Mexico, Texas milk shed. In areas like South Dakota, they continue to grow and they're adding capacity to keep pace. And of course, we obviously know the growth in milk supply in Michigan. So it doesn't seem that those areas are constrained, which means that they're able to keep making milk at those low costs, which, from my assessment, that's kind of the way that I think about the problem about should you make milk powder in Pennsylvania? My answer would be only if you can get a premium for it that allows you to level the playing field with those low cost guys in those other parts of the country. So that's how I think about it.
Thanks, Matt. We have a couple more questions. We are over a few minutes over our time limit, but if we can, with the two more questions, if we can get them answered quickly, we'll go ahead and do that. So the first question is the current dairy market with such volatility still the best option for U.S. overall? Does it favor a specific type of operator, small versus large, niche versus conventional, et cetera? Are there any tangible changes that could be implemented in the market to minimize volatility or more so protect against disruption like we've seen with COVID-19?
Mm-hmm. So there's a lot of really good questions there that I don't know.
Several questions.
I don't know that I have all the answers, guys. I'm trying to think of a way to answer this succinctly. And I guess the one thing I want to, the way I'm going to answer this question is saying, does another country, do they have a dairy pricing system that does it better? And if so, could we adopt that? Which I think gets at the heart of this question, at least to some level. And one of the things that is clear about dairy pricing is that no matter how you structure it, there is no one measure that gives you just the silver bullet. It's clearly better than the others. And I'll use a couple different examples. Australia, for example, they deregulated their dairy industry, and their processors negotiated contracts with farmers. In Australia, your milk contracts, getting a milk contract is a little bit like buying health insurance. It's a very, like each contract is a little bit different. They have seasonal adjusters, they have bonuses for certain premiums. They're very complicated, and trying to figure out whether you got a good deal or a bad deal is hard. What happened in Australia a couple of years ago was that their largest milk buyer, Murray Goulburn, went bust. And along with that, took down about 1/10 of their dairy industry. 1/10 of the dairy industry went bust alongside it. Now, that's what happens in a fully unregulated system. And you get the good with the bad. And then you can kind of compare it to Europe. Europe has these dairy companies that are very large and very, very diversified. You don't, in Europe, you don't have too many of these single producing companies. Like you don't have a milk powder company. You have a company like that'll make all the products. Depending on where you are in the country, that can be a good deal or a bad deal. You tend to, you can have issues, and certain markets in the history of Europe have had really terrible, big issues related to kind of this monopoly power that exists between a milk processor, which is very large, compared to a farmer that's very small. And that's something that our pricing system tends to protect against. And so, whether we have a good deal or a bad deal, or whether it could be made better, I'm sure we can make it better. But you got to start with the idea that you get trade-offs, that you don't find a perfect win. I'm gonna, there's a lot of questions there, Scott. They were great. We could follow up offline. But that's at least how I'm gonna try and get at that, at that idea. Maybe Zach, one more, because I want to respect the time of Jennifer and the rest.
Yep. So the last question, will Q1 2022 DRP policies be available for Class 3 and Class 4 this week? Does buying volume affect that opening?
No, I don't. Okay, so I'm not exactly sure on as we you get 5 quarters out. We do have a milk production report coming this week. There won't be anything offered on that day. They will only trade that they're only available if there is open. I believe there's open interest, and I just don't know the answer to it. I don't know on that. With that, Zach, I don't know if you want to have any more questions, or I can turn it back over.
No, that's it. We'll go ahead and move forward. Thank you, Matt, for your presentation. I don't know about the rest of the participants, but I liked the way you presented that market outlook based on how the farmer's milk price is calculated. So thanks again for joining us today. We appreciate you taking the time out of your schedule to present to us. And of course, you're welcome to stay with us the remainder of the morning if you would like. And with that, before we go to break, Secretary Russell Reagan is here with us. We'll, in respect of his time, we'll let him go ahead and make his remarks, and then after his remarks, we will we'll go to our break and then move to Dr. Garrett's presentation. So, Secretary Reagan, if you're ready, go for it.
Hey, good morning, Zach. Good morning, everybody. Thank you for the opportunity to join you this morning. I really appreciate Matt's comments about the market and some of the comparisons, particularly with our competitors around the U.S., but also the different pricing models and decisions that other countries have made. That obviously we're in that market with them, and what we do here in Pennsylvania, what we do in the U.S. strategically is critical. So thank you, Matt, for the insight. A note of thanks to Jane Seabright and Zach and the Center for Dairy Excellence team over in the last year, but particularly the last 6 months. Just want to say thanks for all that they have done to help navigate through some very difficult times. I have always appreciated the Financial and Risk Management Conference because it captures both the immediate needs that are on the minds of those on the call here, but it also really helps us keep our eye on the future, as we just heard with the exchange and the Q&A with Matt. So thank you for that. The work that each of you are doing, I just want to acknowledge what you're doing, but importantly say thank you. This has been an extraordinary 6 months, and just sort of the whiplash of prices and what's happened from March to where we are here in September. We've seen the highs and the lows, and we've also seen the very best of many people. And I still am amazed, given the pressure points that we were all facing, what agriculture has done to live true to its designation as life-sustaining, and the humanity that we have seen exhibited by individual producers and the community and the industry at large. I just want to say thank you. It's gratifying to know that there are people around us as neighbors and the thinkers among us that are really, really mindful of the human side of this business. And you've demonstrated that at so many levels. There isn't anybody on this conference that hasn't lost a lot of sleep. I know I have, just trying to figure out where agriculture is, how do we navigate through, specifically with dairy, how we address this free fall that we were in, and to now be at a point here in the year where at least we have a little more certainty and stability. While not perfect, but I think anybody who's watched the last couple of months understands what it could have been if it not for the response that came from many, many people, the private sector, from consumers, from government. So thank you for being part of that. COVID has provided a lot of lessons over the last 184 days. Certainly, our threshold for pain individually, our concern of the balance between what's produced and what consumed in the Pennsylvania and the U.S. still matters a lot. We have learned a lot about consumers, and they really do like milk. They like dairy, and I think for a lot of us over time, there was some question about consumption and what was going to happen. But I'm really looking at that as one of the silver linings of a pandemic, is that you have folks who have rediscovered the value of dairy, the value of good nutrition, the opportunity to cook and consume all of these great products that we pride ourselves in producing. But it's also underscored the relationships and how critical they are at all points. The decisions that we've made at the states and certainly with Congress are critical. The resources that have been put forth in the CFAP program have really been critical. I was with a dairy producer last night, and just sharing his own experiences of what he saw in his own checkbook in that March, April, May timeline, and sort of what he was able to do to stay current with vendors. And it really just was gratifying, his acknowledgement of the state and the federal government's response in that regard. And I'm heartened by that and appreciate it. In addition, the state has taken some of the CARES Act funding and dedicated that to a lot of different uses, one of them being in Pennsylvania, $50 million for food and agriculture. That is unique among states if you're watching nationally. We have put money into food assistance appropriately. As of last week, nearly 12 million citizens in Pennsylvania have been served at a food bank, 112 million pounds of food. You don't have a charitable food system without a food system that's charitable. And agriculture has made that possible. So recognizing that in our CARES Act funding is important. The food boxes, the USDA made available, I think, is also a critical part of that. But we have put 20 million into dairy, specifically looking at the milk that was discarded or dumped, and just would encourage anybody who's talking to producers to encourage them to participate in that. That closes the end of September. We're making some progress, but again, it's a bit like the risk management conversations and why dairy producers participate or don't participate. Just want to make sure that everybody is aware that those resources are there. Looking forward, just very quickly, while COVID has revealed many things and we will take those lessons learned forward, we also want to make sure that we're looking into the future, and just would point your attention to the Dairy Futures Commission report that was released in the last couple of months. And I like it because it was an initiative out of the legislature, which gives some ownership to the legislature, but also the diversity of voices that were around the table. Every one of the committees and subcommittees were chaired by a dairy producer, which I think is important, and overall chairmanship by a producer. So you have that flavor, but it covers the spectrum of there's some immediate things we need to do. But we also need to look at the future of Pennsylvania agriculture, Pennsylvania dairy, and pick up on the work that the department did with the Dairy Development Plan. There was a brief exchange about different products and availability of those products, particularly around the export market. I think that's one of the central questions as to what we need to do to prepare here in the state from a processing standpoint if we want to play and continue to be competitive. Is we have to pay attention to that export market. 95% of the available stomachs on any given day are someplace other than the United States of America. And if we want to feed people, that's the business we're in, we do, then we need to make sure that we're prepared to participate in the export market. So trade becomes critical, trade decisions, the negotiations, as we hear every single day, are so critical. But also the infrastructure that we have in the state is critical as well. The commission's report notes that the Philadelphia port, huge investments there, new cranes, deepening the channels. We can accept those larger freighters in the freight lines as a port of call and access to the world now through the Port of Philadelphia. So that becomes important. But equally is the processing capacity and the types of processing that we do. I'm excited about it. I mean, I know that there are everyday worries in this business. There have been, and new ones revealed. But at the end of the day, I remain optimistic about agriculture in the state, about dairy's place in our agricultural, universe, if you will, both in the state and the nation, because of the rediscovery, but also I think a newfound recognition that the importance of food and food access for state and national security should always be top of mind and protected and recognized as critical and life sustaining. So a note of thanks to all of you for what you continue to do. We appreciate the center. We appreciate each of the financial advisors and the risk management entities and all of those who are part of that service to agriculture that are with us today. A note of thanks. Very much appreciate your patience, your guidance, the faith that you've exhibited both in the industry and what we have to do as a state and nation to navigate a very difficult and challenging time. But thank you. I really appreciate your time and be with you today.
Thank you, Secretary Redding, for your comments this morning, and thank you for taking time out of your busy schedule to be with us. And of course, you're welcome to stay with us as long as your schedule allows and into the next presentation. And again, thank you for being with us this morning.
You're welcome. Thank you.
We'll go ahead and take a 5-minute break. I have 10:24, so if 10:29, shortly before 10:30, we'll go ahead and get started. But like yesterday, we do have a video, a testimonial video to show you during the break. If you're staying at your computer, Ginger Breon is a dairy farmer up in the State College area, and she's recently started using some of the center's resources. I visited with her a month or 6 weeks ago to talk about risk management, and so this is what she has to say. But first, let me. Yesterday, I had a screen to. A slide to share our allies. Of course, like I explained yesterday, allies are donators to the Center for Dairy Excellence, and the money they donate we use to provide services back to dairy farmers and the dairy industry within Pennsylvania. So thank you to these allies. I just want to recognize you with this slide. And we appreciate your support. It helps us to get quality programs out to the dairy industry, dairy participants in Pennsylvania. So with that, we'll go to break. I'll be back at 10:30. And Emily, if you want to start the video, go ahead.
CFAP program, I mean, when that first came out, nobody knew what we needed to do to capture that. And the most valuable resource I got was sitting in the Dairy Excellence seminars that were held, I think, once a month or weekly as we were going through COVID-19 was very helpful in understanding the program, having access to that worksheet. I could model what I thought our payment would be, and working with the USDA office, make sure that I was completing the forms right. So that resource was very, very helpful for us for signing up for that program. That's a fact. I've sat in every one of those as they've come along. I've sat in those, and those seminars are very informative, very well done. Having the opportunity to listen to Redding and individuals from Penn State Extension and other experts, having that opportunity to do that really helps keep you informed and make you think about things that you should consider in managing the risk.
Hi, I'm Zach Myers with the Center for Dairy Excellence. I recently had an opportunity to make a farm visit out to Ginger Breon's dairy operation. She was asking wanting to understand risk management options that are available to her, and she's very open to what I had to say and was able to use some of the information I provided her to come up with a risk management plan. We never know what's going to happen, so risk management is very important. At the end of 2019, 2020 looked like a really good year. It was going to build on the success that was the last part of 2019, and 2020 was expected to be quite a bit better than 2020 from a milk price standpoint. And of course, in March when COVID-19 hit, the markets went crazy and dropped. And if you didn't have a risk management plan, it was very disconcerting, and you perhaps didn't know exactly what was going to happen. And with risk management, you can help mitigate some of those issues you have. So it's important to know what's available to you. It's important to be open to a changing dairy environment. Things aren't the same as they were even 10 years ago now. Things are much more volatile. So knowing your bottom line, knowing your cost of production, and what you can do, what steps you can take to help ensure that your cost of production is covered is very helpful to your future success. And
Okay, thank you, Emily, for sharing that video with us, and thank you, Ginger, for being willing to provide us with that video footage for this conference. And with that, I will go ahead and introduce Dr. Jennifer Garrett and let her get started, and we'll hopefully be able to stay pretty close to on time and have plenty of time for questions and answers after her presentation. So Jennifer Garrett has over 30 years of leadership and business experience in agriculture, food, and nutrition. Her business background as a farmer, academic, educator, communicator, and sustainable food system advocate bring a unique and practical perspective to clients with interest in navigating business opportunities from farm to table. Her experiences in agriculture, in the agricultural, food service, and food retail sectors have given her unique insights into research and decision-making at multiple points of the food and agricultural value chain. She started her career on faculty in animal and dairy sciences at the University of Missouri after receiving her PhD in nutrition at Virginia Tech, and her MS and BS in animal sciences at the University of Kentucky. Her desire to be more actively involved in agribusiness led to 11 years in various U.S. and global leadership roles in the Monsanto Dairy and Monsanto Corporate Engagement businesses. For the next 10 years, she held senior positions in nutrition communications and policy with Kellogg Company and with McCain Foods. In 2015, she founded JG Consulting Services, LLC, a strategic management consulting firm dedicated to sustainable food and agricultural systems. So with that, Dr. Garrett, I'll turn it over to you.
Thank you so much, Zach, for that nice introduction. And I would like to start with just a big thank you to the Center for Dairy Excellence, the planning committee, the sponsors, the supporters, and in particular, Jane and Zach for inviting me to join this first virtual session. As I looked at the conference materials and promoting this conference, I kept seeing knowing the numbers. I also saw that change is everywhere and that knowing the numbers can help navigate that new terrain. Well, I grew up on a dairy farm, and as was mentioned, I got a PhD in dairy cattle nutrition. So the numbers are really, really important to me and always have been. Yet as my career progressed, I came to realize that the numbers are important to know, but they don't always help to create change or the appropriate changes. They're important for making decisions, but they don't always influence people to change their behavior or to implement change. So in turn, through professional development programs and through business experience, I have spent the last half of my career focusing on leadership development, understanding the factors that influence change, and working with clients to come up with ideas and execute ideas that will help them build trust in food and agriculture. Because my heart is actually at the dairy farm where I grew up, but I work across the food and ag value chain. So Zach, let's start with, whoops, I'm trying to get my screen to forward. Let's start with a polling question. I mentioned a little bit about who I am. Now I would like to hear or learn a little more about who you are. So we have a couple of questions here. How many years have you been involved in the dairy industry? Looks like quite a few senior people on. 16 years and up. Okay, so the majority of you have been involved in the dairy industry about the same amount of time I have, over 25 years. Okay, so now let's go to our next question. The next question, let's pause this question and let's save that for the next time. Okay. Okay. So it really helps me to know who is in the audience. And it's always difficult for me in these virtual conferences because I really like to be with the audience and moving around with the audience. So bear with me. But knowing that you have been involved in the dairy industry over many years, be thinking about, so what changes have you seen? What has been your role in helping to implement that change? Did you help dairies gracefully get out of business? Did you help dairies expand their business? Did you help dairies to meet their families' goals? I'm sure you did, particularly those of you that have lots of experience. So let's take a look back at the dairy industry over the last 15 years. So these data are from Progressive Dairy. They report every spring based off the previous year's USDA data, what the trends are in the dairy industry. So as you can see in the second column there, reflecting total milk production, when you look from 05 to 19, total milk production continues to climb. Number of cows has stayed about the same. In particular, in the last 5 years, around 9.3 million. The milk per cow, on the other hand, has increased significantly since 05 from 19,000 to an average of 23,000. Licensed dairy herds, on the other hand, have gone down and the average herd size has increased. So there's been a lot of change that have occurred over the last 15 years. And the changes that occurred that helped to support these data are all the way from changes in housing, cow comfort, precision nutrition, breeding technologies and genomics, many other changes, including financial tools like we talked about yesterday for dairy producers, and many others that I'm sure that you've experienced. So a lot of reasons that we've been able to become more efficient with the number of cows that we have in this country and continue to maintain good health and great production in these animals. So that's the last 15 years. What about the next 15 years? What was your role in the last 15 years and what is it going to be in the next 15 years? How will your role change? Did what get you here get you there by 2035? How will you help your clients or your businesses or your organizations manage change over the next 15 years? Because one thing for sure, change is going to occur and is likely to occur rapidly. Will it be a number of dairies that are floating dairies like this one in Rotterdam? Probably not. But one of the reasons this dairy was built was because this entrepreneur wanted to stimulate innovation, rapid innovation, to help feed the expected 10 billion people that will be in the world in 2050, feeding that number of people with the same amount of land and other resources that we have today. So thinking innovatively is something that whenever we are in tough times, we don't take the time to do. But as a change agent, as someone managing change or leading change, it's important for us to take a look at the future, create a vision for our future, and know what our role is in that process. So as you think about your role, are you a change manager or are you a change agent? Well, you might ask, well, what's the difference? And while there's no strict definition for these two terms, for today, I'm going to be referring to change managers as typical managers in that managers typically have control over a business or a part of a business, and they monitor the numbers. Oftentimes, managers are rewarded for telling their employees, telling those that they work with what to do. Whereas an agent is a person that's authorized to act on another's behalf. An agent involves people. An agent knows the numbers, but knows the importance of the people and engaging others and having them to join in the development process for a big change. Agents look forward at what can be. Also, change agents know their purpose. So I want to stop for a moment and have another polling question and have you to think about, why do organizations need or want change agents? Zach? So do they need change agents because they lack expertise in a certain area, because they need an outside point of view, because they're not able to communicate as effectively because they know each other? Do they need change agents just simply as a facilitator to keep the ball rolling? Or all the above? And it depends on the change, right? But most of the time, even the small changes, as well as the big changes, it's going to be an aspect of all of the above. One might weigh a little heavier than the other, but usually, just as you guys have indicated, all of the above. So over the years, as I mentioned, I've studied and observed change agents. In fact, when I was working closely in the dairy industry, I was at the Monsanto dairy business for 10 years. And in that time period, the technical services group that I worked with, we were instrumental in working with change agents across the dairy industry. And one of the things that I'm proud of is in those conversations with some of your stakeholders that work with you on your dairy farm, in those conversations, we were able to bring forward new ideas and emphasize cow comfort, emphasize precision nutrition, emphasize time breeding, and adoption of new technologies, like Posilac at the time. So I've observed a number of behaviors of change agents over time, but I've narrowed it down to 5 that I'd like to talk about today. I've noticed that change agents really understand their purpose, their reason for what they do. They're really clear about what not to do. They're really clear about their purpose. Secondly, change agents really understand and leverage the forces of change. And in this session, we'll be spending most of the time dissecting those forces of change and how to influence them. Change agents also invest time and energy in what can be. They tend to be optimistic, looking forward, not spending a lot of time looking back, but looking forward. Fourthly, change agents understand the importance of aligning all the stakeholders, not just talking at one person, but engaging all the stakeholders when making a change, the key stakeholders for the decision. And then finally, change agents like to learn. Continuous improvement is a sign that I've seen in all the change agents I've worked with over my career. As I mentioned, change agents know their purpose. This definition of purpose I found very interesting in that it describes the point at which your talents and skills and abilities, as well as the gifts God gave you, intersect with a need in the world around you. So originally I thought my purpose was to be a dairy cattle nutritionist, was about making sure that our cows produced well through that precision nutrition. I began to learn that that might be a skill I have, an ability I have, but that a talent, and I don't know if we call it a gift, I'm still working on that. For myself is I enjoy helping people learn. I enjoy helping people implement change. My purpose is about communicating and engaging people to help them help themselves to create change. So what is your purpose? Think about what is your purpose, not your role, but your purpose. People with purpose that I've observed, they really know what matters to them. And if you know what matters to you, it's easier to commit to change, because if you can't identify what matters to you, you don't know when it's being threatened. And in my experience, people often will change their ways when what they value is threatened. So know what matters to you. Change agents are intentional about choices, very intentional. They don't necessarily just wait for things to happen or assume things will happen. They become more and more intentional about their choices and focused. So again, they know what's important versus what's not important. Focus in order to move the ball forward. They're committed. One of the things that I've loved about working in agriculture is people who work in agriculture are committed. We work until we get the job done. The cows aren't going to wait. We always have to be there, right? To milk. We are committed to making sure that our cows are healthy and as productive as possible, and that our employees are taking good care of them. People with purpose tend to shine from the inside. I don't know how better to say that. And they also tend to be difference makers. So I hope that as we've gotten to this point, you've been thinking about who stands out for you as a change agent in the dairy industry. As I mentioned, change agents understand and leverage the forces of change. And one of the first steps of that is, besides knowing your purpose, is to acknowledge and accept that change is going to be messy. This change curve was actually established back in 1969 by Dr. Elizabeth Kubler-Ross. And it was a curve that was originally designed around 5 stages of loss. And while the end of a change usually, hopefully, isn't a loss, when we're going through change, we're leaving something behind to be able to move forward. These stages are real of what humans go through in undergoing change. Denial, sometimes anger or confusion, maybe depression, maybe a crisis. But once we pass through that, and those don't necessarily occur in that order, but once we truly pass through those changes of that change curve, we start gaining acceptance and building a new confidence. And in the forces of change that I'll be sharing with you, these forces, if better you understand them, will help you to move your employees through this curve much faster to get to acceptance and new confidence even faster. So in order to start talking about these forces of change, let's start with, why do people resist change? Well, as we said before, it's messy. It's hard. These soft skills can be the hard skills because change is related to working with people. People might resist change because they're afraid. People might resist change because they're satisfied with where we are now. They might resist change because they just can't see it. They can't see where we're headed. Or maybe they don't believe it. They don't believe the information. Change might be resisted simply because, gosh, I don't even know where to start. My husband and I are in the process of starting a move to another state. And as I started boxing up stuff, I'm just like, I don't even know where to start. So first step, getting started, is really important to overcoming resistance. And finally, you might resist change simply because you don't believe in the change, or you know that some of your stakeholders, maybe your veterinarian or maybe your nutritionist, doesn't think it's a good idea. So that difference of opinion. So let's move to the polling question. Why do you think people resist change? Do you think it's mostly because they're just happy with how they are? Do you think they resist change in the dairy industry because they can't see the future? Or don't know how to start? Or maybe a disagreement? Well, oftentimes it's 1, 2, 3, or 4 of these, and typically it's some aspect of all 4. And it looks like you as an audience are agreeing with that as well. So let's focus now on how we overcome the resistance to change. I'm going to start with an equation. Know the numbers. So, and I love math. This equation actually is from management literature, and it was originally developed by a guy by the name of Gleicher back in the 60s. And then Beckhart and Harris then modified the equation slightly in the 70s and the 80s. And then in the 90s, Dannemiller modified that equation again. I guess that's normal for a change equation to be modified. But the change equation can be a tool for you to use when you're stuck or when you're trying to develop a plan for a change, or you just can't figure out why your client won't make the change. In the left side of this equation, dissatisfaction times vision, first step, and believability must be greater than the resistance to change. So specifying the equation a little bit more, the D stands for dissatisfaction with status quo. I also, in my mind, because I'm more of an optimist, tend to think about what's the opportunity? Is there a big enough opportunity for my client to shift from the status quo? That dissatisfaction times a vision, a clear vision or a clear picture of the future, times a first step. How do I get started? Times believability. And I'll go into more detail about what we mean there. And all of that must be greater than the resistance to change. What happens in a multiplication equation when one of those factors is 0? Well, we know it's 0. So we have to work on all 4 of these factors in order to overcome resistance to change. But let's take them step by step and demonstrate how we can influence each one. And remember, depending on the change, it might be more important to spend more time on the vision than it is on believability, or more time on the first step than it is on the dissatisfaction. But that depends on knowing your employees and knowing the importance of the change. So when thinking about overcoming resistance, this is kind of a weird question, but how can you increase the dissatisfaction with the status quo in order to create a positive change? So yesterday, I heard one of the speakers talk about some of the financial tools, and that the adoption of some of these financial tools in the dairy industry has been pretty low. Why are people satisfied with the status quo? Have you thought about that? And what is it that would help them create the tipping point to be dissatisfied with that, to adopt something new? That's what I mean by focusing on the dissatisfaction piece as a force of change. Now, since we're all working in the dairy industry, I wanted to use an example of how to apply this equation. So I'm going to be using this example through the rest of the talk. The example I'm using is you have a client that has been had low peaks and somatic cell count increasing over time. And you as a consultant working with them just can't seem to get them to make a change. It's clear to you that it's a cow comfort issue. We have dirty cows, we have too many, we have overstocking. It's clear to you, but you can't seem to get a change implemented on the dairy. So they're not dissatisfied enough to overcome resistance. So let's look at that next factor. You know, change agents invest time and energy into what can be in the future. And this V, vision, is a picture of the ideal future state. So what's that ideal future state of cow comfort look like? for this client of yours. In other research that I've done and other work that I've done with a colleague, Dr. Monty Miller, we've conducted over 1,000 different assessments of learning styles of people who work in the dairy industry. And the majority of dairy producers, both owners and employees that we have assessed, have a preferred learning skill of high visual and high kinesthetic. In other words, they need to see it and they need to experience it. The third aspect of learning is around auditory. Typically, dairy industry folks have a lower auditory. They're not really good at just sitting and listening like I'm asking you to do today. So if you're going to create a vision for a change, this change being improving cow comfort, how can you help your client see, feel, hear, experience what's possible? Well, one way is to share a picture. If you had improved cow comfort, all cows would be laying down. You would have clean cows. You would have higher peaks looking at the records. You'd have lower somatic cell counts. But literally, there could be a visual picture of demonstrating why it would be important to consider improving cow comfort. And it's not about telling the client to improve cow comfort. It's about helping engage that client as a change agent to help that client see for himself or herself the need to make a shift. So in addition to that picture or that vision, another aspect of would be to consider, how do we get them started? Do you have a plan in mind of a clear first step? Have you worked with your client to think about steps forward, a project plan? What would it take to improve cow comfort? What are the various stages? It may or may not require a serious modification of a barn or building a new barn. It could be some minor changes. So identifying that first step as a force of change is as simple as helping them to see what to do next, maybe even being there with them to experience that next step. Now, sometimes this lack of knowing what to do is because we get all caught up in having the best plan, a complete detail plan, and we spend so much time planning a first step that we don't get anything done. Now, I'm all supportive of SMART goals that are specific, measurable, attainable, relevant, and time-bound, but you don't need to have all of this tied and dotted and T's crossed in order to create that first step. It's important, but it's not necessary to have at the very beginning. So we talked about creating dissatisfaction as a status quo, making sure that we have a clear vision or picture. And now, what might that first step be? Well, back to this cow comfort example, just a simplified example again of improving cow comfort. What might the first step be? Well, one might be to evaluate records, the financial records, the cow records, the dairy farm management records, particularly if it's a visual person that you know really does want to know the numbers right away. Another tipping point might be created, though, just by having them to tour other facilities first, to take a look at what a difference comfort makes. Take them out to the cows, walk through the barn, go into the parlor and see the cleanliness of the cows and the happiness of the milkers. So sometimes that vision or that first step to be able to demonstrate that vision or to create dissatisfaction is to look at someone else's and then come back to your records. So these are just examples of how you can apply this equation. But these three factors may not overcome resistance yet, partly because, particularly for a big change, we need alignment and integration across an organization. J.R. Latham, who is a change management expert, indicated that alignment and integration determine the degree to which that dissatisfaction, vision, and first steps are consistent in working together. So it's alignment and integration within your organization, with your employees, with your boss. It's also alignment and integration with external stakeholders. And that leads us to the believability of the plan. So as a consultant, as a change agent, maybe you have those first three factors in place and you have convinced the sun that we need to make these changes to improve CalComfort. But what if it's not believed by the key stakeholders? You don't have alignment and integration with the owner or with the grandfather that's not really the owner anymore, but a big influencer, or with the banker. What if you don't have that? Well, in turn, you probably won't have a sustainable change, and you won't, and you will be able to increase believability even more in the sustainability if you have that logic, that cause and effect that your stakeholders can articulate, as well as the person that you've been originally talking with. So back to our CalComfort example. Remember, we have taken that clear first step. We've made the other farm visits. We've looked at the records, but we found out that the believability isn't quite there yet, because this change in CalComfort is not believed or understood or credible to someone else that influences the dairy. Maybe it's the nutritionist, maybe it's the veterinarian, maybe it's, again, your financial consultant. Keep in mind, or maybe it's your builder. Keep in mind that there's a number of different stakeholders for us to be thinking about before we can sustain change, because we need their buy-in and alignment in order to get there. So thinking about alignment and integration when recommending a change, as I said, know who the stakeholders are. Recognize the value of that change for those stakeholders. How is it going to influence the ability to pay back the lender? How's it going to influence the employees, the rest of the family, the grandfather again? So oftentimes this is a step that is overlooked, and it's a step that when investigated is sometimes the reason that you get stuck in trying to implement a change. So back to our example. So improving CalComfort through collaboration. If we were to focus on CalComfort, as a consultant, I would want to make sure that I've had conversations and with the owner, with the person that we're working with to implement the change, as well as the veterinarian, as well as the tech service specialist from some of your input providers, as well as the feeder, as well as the grandpa or the other family influencer, as well as the lender. So again, it's important that we consider all of these factors, that we recognize what the dissatisfaction is or could be, that we recognize and create a picture, a vision for the future state, that we are able to articulate and communicate effectively a clear first step to minimize that overwhelm and ensure that our plan is believable by all the stakeholders involved. And at that point in time is when we are most likely to be able to overcome the resistance to change. Change in the scientific community is often reflected as a triangle or a delta. So change occurs when the dissatisfaction with the status quo the vision for the future, combined with a clear first step, and acknowledging and aligning with stakeholder needs, all overcome that resistance to change. And remember, there is a number of reasons for resistance to change, but by pushing with these factors to overcome resistance and by minimizing the R, or minimizing the resistance, is where you're most likely to have sustained change. So Zach, let's go to another polling question. So this question's about overcoming resistance to change, and whether it's a small change or a large change. But as a change agent, how do we overcome resistance? Do we focus only on the dissatisfaction with the status quo? That might be where we need to spend most of our time. Have we articulated a clear picture? Do we have a flexible plan to get us started? And do we have alignment with those stakeholders? So overcoming resistance, as it looks like most of the participants are reflecting, is a combination of all of the above. And to me, the advantage of having an equation, because we're numbers people typically in agriculture, having that equation to work from allows me to step back before I implement a change, before I even start the conversation about the change with a client, and start considering the factors. That equation is important to be used with your client, not to tell your client how to change, but to be used with your client and help your client to help identify what are those factors of dissatisfaction. What else would you like to see in your vision for your future? And how can we make it more believable for certain stakeholders? Very good. So most of the folks reflected all of the above. Exactly. Thank you. So, gonna wrap up. We're getting close to time now before we go into the Q&A. The other aspect of change agents that I've observed over time is, while we've talked about these other 4 factors around purpose, understanding forces of change, looking to the future, and having alignment integration, this aspect of continuous improvement is a core for change agents from what I've observed over my career. Seeking to continuously learn and improve. And if you're on this personal development virtual conference, you're one of those, right? Center for Dairy Excellence provides many other opportunities to learn and improve. There's other leadership programs across the dairy industry and across agriculture that can be helpful to help you to learn and improve soft skills in particular. You might choose to go outside of agriculture, which I recommend at times, to get some new insights, to learn about how other industries, how other businesses are viewing similar situations. I also am a fan of TED Talks. I don't always agree with many of them, but it stimulates me to think about other ways to approach problems and to find solutions. So, as I mentioned, 5 core behaviors of change agents. And hopefully, as we've walked through, in particular, walking through the equation of the forces of change, that you have been able to bring to mind change agents that you've known and ways that you want to be a change agent for the next 15 years. Getting clearer about our purpose as a change agent, better understanding how to affect those forces of change that we just went through with the equation, simple equation. Better understanding or looking at what can be and encouraging your employees to stop looking back and let's continue to look forward. Better understanding the influence of stakeholders in their alignment and integration. And then, as I mentioned, being a part of this session demonstrates that you as change agents want to continue to learn and to improve. So as you think about the future, how will you be an agent of change in the next 15 years? Leading change helps to put you in control, controlling the controllables that we heard about earlier. Otherwise, the choices will be made for you. And the 5 behaviors today are important for change agents and for building resiliency as we work and dance with the dairy industry and the ever-changing external and internal environments that affect our businesses. Resiliency is an important aspect that we as change agents need to lead as we continue through the next 15 years of the dairy industry. And just a reminder again, change agents don't tell, they work with, they engage. Change agents are those that work with to help clients see the opportunities and identify the first step and help the stakeholders believe the plan for change to overcome that resistance. So with that, I want to thank you very much for your time and attentiveness. And again, want to thank the sponsors in the Center for Dairy Leadership for inviting me to participate. My contact information is available in the materials that were provided to you online. So while we will address some questions now, keep my information and feel free to reach out and I'll be glad to have further conversations with you and answer any additional questions. So with that, Zach, I'm going to stop sharing my screen and open it up for Q&A.
Okay, yeah, thank you, Dr. Garrett, for your energetic presentation. I liked the information you presented, and I know that we all found it very informative, and hopefully we can all be stubborn at times, and sometimes resistance is hard to overcome. And hopefully, with your presentation, those that deal with change on a regular basis can know better how to address that. But so thank you. I don't know if you received any questions privately. I did not, but I will to get the question started. I'll ask one. Is if you could just if you had one piece of advice for overcoming this resistance, one thing that you see as a huge problem you see, and how do you go about addressing that situation to get that resistance overcome?
Yeah. Well, of course, the classic university extension response that I was trained early on was, it depends, right? Of course, it depends on what you're trying to change. But if I were to identify one of the most important things, is to really be a good listener. Listening not only of what words that your client is saying, but listening to what's behind that. What's the feeling behind that? What are the other factors behind that? So listening will help us to create or identify the dissatisfaction or increase that dissatisfaction. Listening for what's behind the words helps us to create a clearer picture for the future and likely to create a clearer plan. One of the comments that I received during the session was around, wow, it takes 4 things to overcome one thing, 4 things to overcome resistance. Resistance is a core aspect of the human psyche. Our bodies are from a neurobiological perspective, we tend to, when faced with change, the old flight or fight, when faced with change, we tend to go into kind of a fear mode. And so in order to overcome fear, it does take more than one thing. In order to overcome resistance, which is an easy default, it does require more than one thing. It doesn't mean you spend equal amount of time on those 4 things, but by acknowledging and thinking them through, it will help from my experience and from others who have utilized this formula, it will help you to identify where you might be stuck or how you can accelerate acceptance of that change even faster. Zach, I also had a question privately related to what if the party you're working with is resistant to change due to past grudges? And that's a tough one because that's getting into often a personal situation. And as a consultant, it's really hard to be able to shift that change. But where I have been successful in helping to overcome a resistance like a grudge is to identify what other influencers does that individual trust? What other influencers does that individual listen to besides the grudge situation, besides the person that they have a grudge with? And I would ramp up the influence of others to help this person see the vision, to see the reason for the change in order to overcome that resistance. Grudges are a tough one though, because they're rooted deep in the heart, and that's tough to change. But I strongly believe in the influence of external stakeholders, and in particular, people that they trust. Those people may or may not be in the dairy industry. It may be a personal friend, but I think that trust is the core of being able to overcome resistance.
Thank you. You mentioned there towards the end that sometimes you recommend going outside of the dairy industry for ideas. What business sectors or areas do you, in your experience, do you notice that maybe have similar values or similar problems to the dairy industry, even though it may not even be an agricultural business?
Yeah, so, in my experience, I had the advantage of working the first half of my career directly with farms. And the last half of my career, I was working in the food industry, working with food retailers and food service. That alone of getting exposure to how decisions are made outside of the farm really helped me to better understand what we need to do at the farm. So just really recognizing what's motivating other, the end of the value chain helps me to at least articulate why some of the demands that they have are there. So that's one aspect of just getting exposure to other industries outside of our own farm is really important. The other aspect that I would share and emphasize is my observation is in agriculture, we tend to really be good at talking among ourselves and reiterating what we think and not always stopping to listen or learn from other industries. So you ask what other industry is like the dairy industry. Within the agricultural industry, there's a number of commodity organizations that are challenged like dairy. But outside, where can we find other examples of ways that we as managers, as we as change agents, can strengthen our leadership skills and view our dairy businesses as more than just working with my family, but more as being able to create that vision through leadership of moving forward. And there are a number of different programs outside of agriculture to help us to improve leadership skills. So it's not just about the numbers, although that's really critical, but I would look outside of the agriculture industry to get additional training as it relates to being an effective business leader as well.
All right, thank you, Dr. Garrett. Did you have any other privately chatted questions that you need to answer?
I don't see any more. Do we have any live questions?
Yeah, does anyone want to verbally ask a question to Dr. Garrett before we end this session? All righty, well,
Zach,
yes.
Zach, Back to do that, if anyone would want to, they would need to use the hand raise because
Yeah,
right now
yeah.
they're all muted.
Yep. So yeah, as I mentioned earlier, if you want to verbally ask a question, use the raise your hand and then I'll recognize you and you can unmute yourself. All right, I don't see any hands raised, so I'll go ahead and thank you again, Dr. Garrett, for your presentation and for taking the time to join us this morning and give us a lot of valuable information to hopefully we can use to to either if we're the dairy farmers that are participating to know some common issues surrounding change management, and to the consultants that are joining us to maybe some strategies to help their clients to move forward with managing that change. So thank you again, and we appreciate you joining us this morning.
Thank you.
With that, just have a couple of remarks. We will be sending an email with links to both recorded sessions, yesterday's session and today's session this afternoon for you to listen to them, or for those some of the participants weren't able to join live and wanted the link to listen later. So we will get that out this afternoon when that link is available, and also an additional link will be in that email to that will link to our financial conference survey. So I know sometimes it's tedious to answer surveys, but it's a short survey. Shouldn't even take 10 minutes to complete, but it even though it's a short survey, it'll give us a lot of valuable information when planning future financial conferences. So Emily has put in the chat box that that link to the survey if you want to go ahead and fill it out now. But again, it will be sent in email later on today as well. So with that, Jane Seabright, our director for the Center for Dairy Excellence, would like to make some closing remarks before we finish this morning. Jane.
So good morning, everyone. I just wanted to close with a couple notes to share on behalf of the center. First of all, if you enjoyed Jennifer's presentation, please consider joining us for our fall roundtable meetings, which will also be held virtually. We have invited King Hickman, who will share strategies on encouraging change on the dairy farm. He has some simple steps that you can take to lead folks through the change needed to move farms forward. The first date for the roundtable is October 22nd. If we reach capacity for that date, we plan to add additional dates. Secondly, I want you to know that we are busy planning the 2021 Dairy Summit, which will be held the week of February 8th. With the concern expected to continue about large group settings, we are moving the summit this year to a virtual format. And we are really excited about what we're going to be able to offer. We're working with a company that is going to help us do a really, really inspiring event. Lastly, you can look for more on that to come out later this month. Lastly, I just wanted to give you an update on our on-farm programs. I'm sure you're all aware of the Commonwealth's budget situation. Although we are working with a smaller budget this year, we are still going to roll out our on-farm grant programs in early October, and we're pleased to be able to offer grants despite the budget situation to farmers who want help in business planning or who are working through business transition or transformation. If you have clients who would benefit from one of these programs, please encourage them to apply early and as soon as they can after the application process opens. We are working with a lower budget, so we will have fewer grants available. Finally, I want to close with a note of thanks. First, to the speakers, both from today and yesterday. We appreciate you taking the time to share your insight with us. Secondly, I want to thank the attendees. We recognize the value that being together in person provides. However, we do think there's value in this virtual format and in gaining the insight that these speakers had to offer. We are pleased to see that nearly 100 people registered for this conference and that you agreed in seeing the value. We do want your feedback, so please fill out the survey. Finally, I want to thank Zach and the rest of the CDE team. Moving these types of events to virtual is not easy, and it takes a lot of coordination and preparation behind the scenes. I have been inspired about how this team has stepped up over the past few months to pivot and innovate in this new way of doing things. Just a reminder, the center is here to serve the dairy industry. This past year has taught us all to embrace uncertainty and find a way to flourish in it. But change and uncertainty should be nothing new to us in dairy. One thing the team at CDE really excels at is connecting farms and dairy businesses to the information, resources, and expertise they need to flourish and thrive in what is an ever-changing and rapidly evolving marketplace. Please remember to give us a call if there is anything we can do for either you or for any of your dairy farm clients personally. We are here to help. And remember that all of our resources can be found at centerfordairyexcellence.org. With that, I'm just going to turn it back to Zach.
Thank you, Jane. That concludes this year's 11th annual Dairy Financial and Risk Management Conference, which also happens to be our first virtual one, though. So thank you again for everyone for attending and helping make this a successful event. And I'll reiterate, please fill that survey out through the SurveyMonkey link in the chat box or via the email you get later on this afternoon. That will certainly help us know what we need to work towards for next year. So with that, thank you again, everyone that attended, and to the speakers. And we look forward to seeing you again, hopefully before next year, but if not, then at next year's conference. Thank you.